session. So it's Farooq from Mubarak Al-Kitwi Chartered Accountants. I'm auditor and tax agent. Today we'll talk about how to calculate tax liability. So what are the adjustment you have to pass calculating the final tax liability. So hopefully in our previous sessions you gone through and you got the benefit also with the experience. Normally clients are asking different questions. I try to share maximum, but still if you have something, so you can please ask us, send us email, or you can put in the message. Here you can put the message also if you have any question. So let's discuss about the corporate tax liability. First of all the companies who are in the UAE, they have to calculate the accounting profits as per IFRS. So in the accounting profits, normally they are doing all the expenses, charging all the things as per following the IFRS rules. Once it is done, but first of all, because lot of companies they don't know how to follow the IFRS, please make sure, because in UAE as per corporate tax law you have to follow IFRS. Make sure your organization is fully following this, because if you will not follow, then there might be compliance issue. So might be there will be fine or other queries from the authority will come. So better take a auditor advice or a tax agent who can might be also guide in some areas, but major is auditor can help you in the IFRS implementation. So one whole year accounting department will record the entries in the accounting software following the IFRS. After that, once at the end of the year, passing the closing year entries, so taxable profit will come. So this taxable profit will not be simply taxed straight away at 9% or 0% based on the applicability. If you are in the free zone, might be you are qualifying free zone person and fulfill all the requirement, then 0%, otherwise 9%. So this taxable profit will come. After that, in the law, in the corporate tax law, there are some adjustments that you have to pass. So what are these adjustments? Then because once you will pass, a tax agent will calculate after passing this adjustment, then whatever net profit, taxable profit will come, that is term is being used as taxable profit. When taxable profit will come, then you will pay tax on that profit, not on the accounting profit. So the question asked by a client, sir, we will calculate the tax on what? On taxable profit or accounting profit? So the always the corporate tax liability will be calculated on taxable profits, not on the accounting profit. So here are some adjustment that a lot of the viewers might be know some of them, but I'll try to list down so you can have a better idea. First of all, the entertainment. Entertainment is only 50% is allowed. The entertainment expenses of an organization. So the question came by a client, so how much entertainment expense is allowed? So keep in mind 50% of the entertainment expenses are allowed, but these 50% will applicable on if this is being done by a shareholder, for the customer, for the supplier. But if entertainment being used for the staff, it's 100% allowed. So then the second one is personal expenses. During our audit experience in the past, when corporate tax was not there, so people were just recording the transaction. There was no differentiation between the shareholder personal expenses or business expenses, because earlier there was no tax, so no one cares. In fact, it was wrong, but no tax was there, so you can say, okay, things were happening, no authority was there to ask. So, but now the question is, the personal expenses allowed for adjustment, a deductible for the corporate tax? No. Personal expenses are not allowed for corporate tax purposes. It's not allowed to reduce the profit. So, personal expenses, please, if someone, any accounting department recording shareholder personal expenses just to reduce the profit, remove it. And end of the day, it will be removed by a tax agent, and by calculating the taxable income. So, personal expenses are not allowed. Okay, there are some expenses might be used for personal as well as for business expense. Let me give you a simple example. For example, maybe, okay, I can say a car. Maybe it's used for business expense as well as for the personal use also. Here you have to do a reasonable apportionment, but better all the expenses done for business purpose only that should be recorded. So the question is, what is what if any expense being done and it is used partially for personal and partially for business? So there must be, law says there must be a reasonable apportionment. Law is not specifying any percentage like 50% like, so must be a reasonable. So reasonable mean logical, it should be understandable. Might be small, minor, 5% plus minus, okay, I think it's fine, but there should not be a big difference. So it means if any expenses are there that are being used for the being done for personal and business, so reasonable apportionment should be there. The next question, a donation. Here in UAE, people giving the donations, different different people, different. So in UAE, for corporate tax purposes, you gave to donation anyone. It does not mean anyone, does not mean. But if you will not, if that donation is given to someone who is not qualifying public benefit entity, so this will not be allowed. So how you can know qualifying public benefit entity? That you can, their ministry have already issued a list on all the entities. It's more than 200. So if you are giving any donation, like you can say Sheikh Muhammad Charity Institute is there, any sports, or that is for public benefit only. Some organization working in UAE that purely work for public organization, for the benefit of the public. So any benefit given to that benefit public benefit entities is allowed, but if you give donation to someone else other than that, is not allowed, so it will be add back. The next one is okay, bribe. Bribe, illicit payment, and kickbacks, so these are not allowed. These expenses straight away not allowed. Of course, a UAE, a very good economy, people are here, I think we are enjoying. So why we are enjoying here? Because safety is there. So safety is there, I mean rule is there, law is there. There are rules that everyone is following. So that's why here no under table commission, kickbacks are there. So as a society, as ethically also it's wrong, and in the law it's clearly mentioned. The next one is interest. Okay, interest is 30% of EBITDA, or what is EBITDA? Earning before interest, tax, depreciation and amortization. So either 30% of that or 12 million, 12 million, whichever is higher. For example, if you calculate the EBITDA, 30% become maybe 20 million, for example, and or 12 million. So whatever it means, maximum you can go in 12 million. So maximum, it means in short, the question is how much maximum tax is allowed, interest is allowed. So how much interest is allowed? 12 up to 12 million or 30% of EBITDA. The drawing used for personal expenses, like I'm a owner in the company, I'm the owner and a shareholder. What I'm doing, whenever I need some money, I'm withdrawing from the company. So this is not the expense, because this is just a drawing, this is a balance sheet item. So this is also not deductible for corporate tax purpose. And losses incurred on non-taxable activities. So if you are incurring any losses that are non-taxable activities, so not allowed also. And then dividend also, some people, this actually the commonly asked question. One client even last week also, he said, Farooq, I have this much for offered, for example. So if I will take dividend, so do I need to pay tax? Yes. Dividend is not expense. It is once you pay the taxes, everything, the left, whatever is there, yes, you can take it as a dividend and you can use for your personal use or whatever. But dividend is not deductible. It's not allowed as an expense. So some adjustment you have to pass, like realize gain and losses, but you have to make the election, and this election is irrevocable. So what does this mean, irrevocable mean? If you will say, okay, you will go for realized basis or unrealized basis, in the realized basis also maybe all assets or only capital assets. So this, once you will select, based on that only you can have the adjustment. Then some exempt incomes are there, like dividend. Dividend, if you are earning dividend from UAE entities or from foreign entities, that is exempt. So these exempt income you will reduce, it will be less. And then participation income. Participation in exemption is while you having foreign dividend, foreign gain and losses, if you have investment in shares, for example, or investment in the, you bought the shares in foreign entity, so you can you are getting dividend or capital gains, that is also will be the less, that is exempt income. And then foreign permanent establishment, for example, a company, a UAE company have a branch in UK, so that is, it means a foreign permanent establishment. So there is option, either you can apply for exemption, you have 10 branches or foreign permanent establishment, you have, it will, if you want to apply for exemption, straight away it will be applicable for all. It's not like only it will be applicable for one only. Maybe you have a losses one, you will say, okay, I will take it, but profit one, you will not take it. So simply you can apply to authority that permanent exemption, you can apply it. This is also exempt. So international transportation of the non-resident subject to reciprocity. International like Emirates airline is here in UAE, and in UK British airline. So if Emirates have exemption in UK, because Emirates have offices and they are selling the tickets, passenger, and they are getting income. Same way British airline also have offices here in UAE. So if if Emirates airline have exemption in UK, same way British airline can also be have a exemption. So then there will be adjustment for tax losses, but if you have a tax group or qualifying group, so up to 75% of the taxable income, you can adjust the tax losses. Rest you can carry forward. This is, you can say, income reducer. And tax liability, then tax liability will be calculated 0% up to 375,000, and after that there will be a 9%. So there will, once this one done, now you have a tax liability, example 100,000. Now you have to pass some adjustment. You can pass In the future, withholding tax will be there. Right now it is 0%. So if any withholding tax being deducted during the period and you paid the withholding tax, so that will reduce your tax liability. For example, if even you paid withholding tax more than your tax liability, so it will be refunded. So you will get only, there are two ways. Okay, the question here is, what will be the what will be the situation where tax refund, you can apply for tax refund. One, if withholding tax is paid more than your tax liability. Second one, if you paid by mistake extra tax, so you can apply for refund. Otherwise there is no other way. Some people confused with the foreign tax credit also, so that if you paid tax in outside UAE, so that you can adjust here. Here you can adjust only up to the 9% maximum. So it means this is just end of the day, this is zero, we can say. For example, if there was 1 million, okay, you paid 9 and in the UK you paid in the UK 25%. So here you will get the tax credit only up to 9%. So it means you already paid extra there, but does not mean you will get adjust that tax here in UAE. So this is just the adjustment, nothing more. So foreign tax credit is there, then after this adjustment you will pay foreign tax liability or might be refund only due to withholding tax. So these, while you are calculating the taxable income, these are the adjustment you have to make sure you pass. Of course, everyone don't know because they don't have the expertise. So you can contact us, being I'm a tax agent also. So you can contact us and we will try to help you, and hopefully you can comply with the UAE corporate tax law. And if anything, you please send us email also. We are here to help you. Thank you so much. See you next time.
Good day, everyone! Are you still confused on how and when to register for corporate tax? Don't wait for the deadlines to pass. Reach out to Mubarak Al-Katbi Chartered Accountants. We are one of the few audit firms in the UAE that are approved by the Federal Tax Agency and have served over 2,000 satisfied business